Assalamu alaikum, everyone. I hope you are doing well. Today, I'm going to get into when I think Bitcoin will reach its all time high again and when it could double, and get really specific about my prediction. I know that it's specific enough to be wrong, but if we can see where the ballpark is for these major milestones, I think this could be really useful for us as investors. And I'm seeing a lot of data that is really bullish for Bitcoin. And I want to relay that for you and then go into my bullish prediction for when we could reach our all time high and then when we could double from there. So, without further ado, let's get into it. All right. So, a lot of good news for Bitcoin bulls like myself. The first piece of good news is that we've displayed really a lot of resiliency in this most recent bull run. If you look at our max drawdown in this bull run, it's been around 20%. Now, even though many may think that that is a lot to draw down, if you look at the previous bull run, we had more than two 50% drawdowns. The bull run before that, we had 25% corrections often. And then before that, we had even more dramatic and more numerous drawdowns. So, historically speaking, we've been performing extremely well, which I think is indicative of added maturity that Bitcoin is enjoying. Now, when we look at the main event that has impacted Bitcoin this year, we can now see that the outflows from GBTC are slowing down and they're more than made up for by the inflows into the nine new ETFs that were approved this year. So if you look at the 29th of January, for example, you had 191 million flowing out of Grayscale and 255 million was the net inflow. So after the 447 million flowed into the nine new ETFs, and so the net was 255 million of inflows into ETFs on that particular day. And since we started, and since the Bitcoin ETFs were approved, the net inflows from the first 12 days after approval was $1 billion. So that's what flowed into ETFs, uh, even accounting for the outflows from GBTC. So excluding GBTC, it was around 6 billion in inflows, but given there were 5 billion of outflows, the net from GBTC, the net was 1 billion. So even though we had this sort of wrench thrown into the equation with the GBTC having its fees way higher than other ETFs or the ETFs that were approved, and the outflows from GBTC and the selling pressure that that created, even though we had all that, net the net movement was plus 1 billion flowing into Bitcoin ETFs. And we're seeing a slowing of outflows out of GBTC. So this is all bullish data that is pointing towards a really solid 2024 for Bitcoin. And in terms of how much more GBTC can lose, well, I did the math, and I think this is really what the GBTC management was thinking, and that is if we continue to charge 1.5%, all we need to do is retain $4.3 billion in assets under management, and we will be earning just as much as we would have been earning if we were to lower our fee to something competitive with everyone else. So if we lowered our fee to 0.25%, for example, in order to retain the 26 billion that GBTC started with, um, they would earn basically as much as they would have earned uh, keeping their fee high at 1.5%, even if their assets under management shrunk to 4.3 billion. So there's a lot of outflows that I think GBTC would still tolerate before it kind of threw up its hands and said, okay, we need to reduce our fee. And if you look at just to get an idea of the scale of uh, what has happened, GBTC at its peak had around 661,000 Bitcoin, and now it's down to 506,000 Bitcoin. So they've really uh, taken a huge loss in terms of assets under management, but I think they probably still have some additional appetite for more losses um, moving forward, given the calculation that I provided. Another piece of good news is that the hodling, the behavior of GBTC, or I'm sorry, BTC holders, has been indicating more and more conviction in the assets. So if we were to look at the amount of BTC that has remained idle for more than a year, that's almost at an all-time high. And the same with the amount of BTC that has remained idle for more than 2 years. And the same with the amount that has remained idle for more than 3 years and 4 years. So uh, now, something I think noteworthy is that there was a dip in that amount of BTC that has remained idle after the ETFs were approved. And I think a big part of that was people who had basically kept their BTC idle for years decided, hey, why am I keeping it in self custody and taking the risk of losing my BTC being the person basically storing it, let me actually offload some of that risk to BTC ETFs. And that's why I think you saw some BTC that was idle for years on end actually move recently after the BTC ETFs were approved. I think also noteworthy is the success that these new BTC ETFs have enjoyed since their launch in that they've now become one of the most popular ways to hold Bitcoin, even though they're so recent. They've only been in existence for around 12 days now. And they're already, uh, in terms of amount, they're already more BTC in these new ETFs than there is in Tether, in publicly traded miners, in Tesla and Block, and eventually there'll be more. Very soon, there'll be more than what MicroStrategy holds, and there'll be more than obviously GBTC. So the trend is clear here the in terms of how investors prefer to hold their BTC, and I think they're displaying a clear preference to holding a good portion of it, at least, or a good portion of investors are displaying preference to holding it in BTC ETFs and offloading the risk of self custody to someone else, which I think makes a lot of sense. Additionally, in terms of good news for Bitcoin bulls, the Bitcoin ETF business has become really cutthroat. Initially, the winners have been BlackRock and Fidelity. They've been able to attract the most assets under since their launch. And Invesco and Galaxy are trying to catch up. And in order to catch up, they've now reduced their fees even after their waiver period. They've reduced them from 0.39% to 0.25% in order to be more competitive. And so As these ETFs become more and more competitive and their fees continue to drop with time, this asset is just going to become more and more attractive for investors to add add to their portfolios. I mean, you're telling me the asset that has outperformed every other asset on earth also comes with the lowest management fee? That becomes a no-brainer for investors, and you see a lot of commentary assuming, 1% of portfolios are allocated to Bitcoin, 2%, 3%, and, the calculus from that is, okay, Bitcoin is going to appreciate multiple X's from where it is right now. Now assume that the portfolio allocation is something closer to 20%. And more investors start to see, okay, wait a second, this asset is consistently outperforming, and also management fees are minuscule, they're negligible. Why do I not have more of my portfolio in this asset? More and more investors, I think, are gonna start thinking along these lines. And as a result, you have other firms thinking about creating their own ETFs. They want in on the action as well. The Bitcoin ETF launch has been, in terms of volume, has exceeded any other launch of any other ETF in history. And so other firms are thinking, "Hey, we want in on this race." And so Schwab, which has basically 2x the amount of assets under management as Fidelity, is also considering creating its own ETF. So more and more players are coming into the space, and this is just really good for the asset. And so everything I've mentioned in terms of good news for BTC that is building up, this is on top of the underlying thesis for Bitcoin, which is that the the nearest competitor to Bitcoin in terms of being a store of value is perhaps the US dollar. And if we were to look at the US dollar as we look at any other digital currency, and most of the US dollar is digital, if we were to compare them, and analyze it like we do any other digital currency, what we like to look at is the amount of new token issuance, right? For any cryptocurrency, that's investing 101. You want to see what is their schedule for token issuance, and with US dollars, you can see that a number of US dollars out there has 4x in the last 20 years, and it's not gonna stop anytime soon. If you look at the annualized rate of interest that has to be paid on the US government's debt, that has now exceeded $1 trillion for the first time in history. So there's a flood of new tokens coming in, new US dollar tokens, that is. And people are going to wake up to the fact that they don't want to hold this highly inflationary token. And so the fundamental thesis behind investing in Bitcoin is now true more than it's ever been. So all of these fundamental factors leads us to this final technical analysis, if you will, about when Bitcoin will reach its all-time high and then when it will double. Now, if you look at previous bull runs and you look at where we are right now, so where we are right now is represented in that black line, and then the previous two bull runs are represented in the blue and red lines. You can see that we're basically on schedule and history is rhyming. So at this point in previous cycles, so in the 2017 to 2021 cycle, we were at 55.5% of our all-time high. So the price was 55.5% of what it was at the all-time high. Uh, in the 2013 to 2017 cycle, at this point, we were at 54.3% of the all-time high, and right now, we're at 66.9% of the all-time high. So we're a bit ahead of schedule, and perhaps this is due to some of the dynamics related to the Bitcoin ETF and the build up to that. But if we were to reach the all-time high at around the same schedule, we're looking at somewhere around June or July to reach the all-time high. And believe it or not, if we were to look at the last two cycles, somewhere around October, November to reach twice our all-time high. And perhaps this is why you've heard many authors say, okay, we might reach 100, north of 100,000 this year, perhaps 150,000 this year. So, based on this analysis, what I'm seeing is that the fundamentals for this asset continue to improve, and it's supported by the technical analysis as well that tells us that we're on schedule. And it seems that history is rhyming this time around, just as it did in the last cycles. So, with that, I hope you found this beneficial. I'm going to take some questions in a second. If you found this presentation beneficial and you'd like more value, consider becoming a PIF member. Otherwise, you can always subscribe for more live streams like this and hit the notification bell so you know when I do go live. Let's look at our questions here. Salam, do you think we can get a Black Swan event or another major push down? Well, by definition, Black Swan events are not predictable, but I can say that the possibility of a Black Swan event is open at any time. So I think that should definitely be in your calculations. Obviously, never invest money that you can't afford to lose or that you need in the near term because of these Black Swan events. Cover already? Okay, inshallah. What percentage of your investment is in BTC or BTC related asset? Good question. I would say the majority of my exposure to BTC is through BTC proxies, such as BTC miners, and also proxies in crypto that have high correlations with Bitcoin. So, what the plan is because historically these proxies have appreciated faster than Bitcoin uh, during the this stage of the bull cycle. The plan is when we start reaching mid cycle or close to the top, I'm going to start moving a lot of these proxies into a Bitcoin. So that's kind of the plan. What is my opinion on airdrops? So I'm getting this question a lot. I don't think there's necessarily anything to worry about with regards to airdrops, so long as what you're getting dropped is halal. So, if I'm giving, if I'm providing a giveaway of um, pork, then you don't want to, you don't you don't want to be involved in that. If I'm providing a giveaway of something halal, then there's no issue with receiving your share in that giveaway. So yeah, just make sure that whatever you are, you never benefit from anything that is questionable or haram. That's why you said losing value. It means your majority investment is in BTC or BTC related. Um, yeah. So in terms of like the percentage that is BTC related to my overall portfolio, I would say like Bitcoin proxies. I mean, it really depends on what you. I mean, you could, in one sense, consider my entire crypto portfolio to be a Bitcoin proxy because there is a high degree of correlation between Bitcoin and the crypto market in general. So think it depends on how you define that. If you'd like to, follow my portfolios in more detail, then consider becoming a member. I hope you guys found this live beneficial. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.